Hello and welcome to this video. My name is Daksh and in this video I'm going to tell you about order block and order flow trading strategy. Now we have already had videos on order block and order flow, and if you haven't watched that then you can check it out by clicking the I button. Now before we move to the strategy part, we will first have a recap, and I also want to tell you that it is going to be a very big video and there will be a lot of things. So if you want, then you can take a notebook and start taking notes, because it will be much easier for you if you have notes. It will be much easier to backtest this strategy. So let us first see what are order blocks and order flows. So as I told you earlier, that order block is nothing but a way by which the institutional traders build their positions. So whenever you see a structure which looks like this, then this is called as a order block. Now this people also refer it to as order block or retracement or consolidation, and there are many other words, but this is what order block is. And order flow is nothing but after an order block, whatever direction the price breaks the order block in, it is followed by a order flow. That is, whenever a order block is breached by the price, it keeps on moving in the direction where it breached the block. So this will be the order block, and then this will be the order flow. So now that you know what order block and order flow are, also if you want to know about this in detail, which you should, and it is very important that you know how to spot the order block, so I would suggest you to go and watch those videos first, because those are going to be very important if you want to master this strategy. Now let's move forward to the strategy part, but before that I would like to tell you what your approach should be when you follow this trading strategy. Now, I believe there should be an approach for every other trading strategy you use. So I would like to tell you what approach I want you to follow if you are following this strategy. So the first thing you have to understand is, do not commit to the market until and unless the market commits to you. What I mean is, I don't want you to think or keep a bias or hold a bias and take positions based on it. I want you to be as uncertain as you can. Because when you try to predict something, what you are doing is you are committing to the market because you think that a certain thing is going to happen. But when you stay uncertain, you are reacting to whatever the market is doing, and that is how you make money. Now, the other thing you to do is always be with the trend. Now, I always say this, whenever you are with the trend, it is like being with the trend is the easiest money in the forex market. As long as you are with the trend, you are on a good side and you will just keep on making money. So I want you to understand that you have to be with the trend if you want to win, or you have to maintain a good expectancy, or let us say a good win rate. So these are the two approaches which you need to follow while following this strategy. Now let us move to the charts and I will tell you about the strategy, and we will discuss everything step by step in such a simple way that you will understand it very clearly. So let us get started with this. Okay. So the first step is, as always, finding the trend, because I just told you that being with the trend is the best thing you can do with your trading when you follow these kind of strategies. So first you need to find what is the trend of the market, like where is the market moving? Is it moving down, or is it moving up, or is it ranging? So for that there are different things, like you can use highs and lows technique, which I have already taught about, and I will add all the videos in the description down below. So make sure you go through all of those, because you will need all of those information or knowledge to use this strategy. The next one is moving averages. Like I use the 100 and the 200 moving average, and I will tell you why I'm using this, but this also helps us to be with the trend. Like whenever the price is above these two moving averages, then we have a bull market, and whenever the price is below these two moving averages, then we have a bearish market, and whenever the price is ranging like this, then we have a market which we should avoid, because it would be a ranging market. Now the third technique is trend line, but I don't suggest you use that because it gets a lot of complicated when you use a trend line. Okay, so after you have found the direction of the market, the next step which you have to do is you have to find the order blocks. Now if you don't know how to find or how to solve the order blocks, you can check it out, the video, by clicking the I button over here. Now order blocks, as I told you, is something when the price moves sideways like this. So let us say this is our order block, and after spotting it, what you have to do is you have to draw two zones like this over here. Like take a rectangle tool and draw one zone like this, an upper layer and a lower layer. So this area over here will be your order block. Now you have two things with you. The first one is you know the direction of the market, and the second one is you have an order block. Now the question is, how do you trade it? There are different ways to trade it. Like you can trade the breakout of the block, you can also trade the pullback of the order block, and you can also trade the order flows. So let us first understand how to trade the breakout of the order block. So let us say this is the order block. Now when the price break past this order block, like when the price breaches the order block, what you have to do is you have to enter a buy trade over here. Now why we are entering buy trade over here? Because the price is moving up, that is we are in an uptrend, and then when the price breaches this order block, then you have to enter a buy trade over here. And your stop loss can be a few pips below this, or to be safe, your stop loss can be a few pips below this level of the order block. Now the second way is you can enter at this level. Now for that, what you have to do is you have to first see if the price is respecting the moving average. That is, you have to use the order block levels plus moving average to get a sniper entry. In this case, I will tell you how to do that. Let us assume that this is the moving average and the price is just following this. Now two times you saw that the price was respecting the moving average. So when you see that the price was respecting the moving average, the next time the price comes near that moving average, and if you see a order block, then what you can do is you can enter when the price touches the moving average. Like let us say over here, you can see a order block is forming, and when the price first respected it and it moved up, and then again when it come near it, what you can do is you can enter a trade over here, and then you can keep your stop loss a few pips below it, and your first take profit will be here, and the second you can keep it to break even and then ride the trend. So this was the second way how you can trade the order block. Now many times what will happen is, let us say this is a order block which you were spotting, and when you try to enter a breakout entry, the price broke out of it and the candle got finished somewhere near here. So in this case, what will happen is you won't be able to enter such entry because the stop loss will be too big, because the most nearest stop loss for you will be here, which will be a risky stop loss, and your safe stop loss will be below this level. So during such time, what you can do is you can let the order block be followed by the order flow, and then you can enter the pullback. For this again, you can use the moving averages, and there are conditions to use this. Like in this case, let us say you can see that the price respected the moving average, it broke past the order block, and then it moved up. So let us say this candle got finished over here, and it is just an assumption, like it is just an example which I'm giving. It did not happen here. So when this thing happened, what you can do is you can wait for the price to retrace till the moving average. So when it did, you can enter over here, and then again the price moved up. Now again we have an order block type of structure over here, then the price broke past it, then you can enter over here. Again in this case, we knew that the price was respecting the moving average because thrice it jumped from the moving average. So again in this order block, when the price drops till this level, you can enter a buy trade over here. You can keep your stop loss below this confluence zone, and when the price moves up, you can take one take profit over here, and your other take profit will be floating because you can ride the trend. So these are the three steps by which you can trade the order blocks and order flows. So this was an easy to use and a simple order block and order flow trading strategy. Now, I believe that strategy is just a part of trading, and the most important things are the psychology, that is mastering the inner game, and also the risk management and the money management. So this is how you have to trade the order block and order flow, and this is the order back. So this is how you have to trade order block and order flow, and this is the simplest and the easiest order block and order flow trading strategy with a very good amount of win rate and risk to reward ratio. Now, before we move forward, if you are enjoying this video, then make sure you hit the like button and also do not forget to subscribe to this channel. Now, there are a lot of questions which a lot of you guys asked me on my Instagram and also on YouTube comments. So I'm going to answer all those comments. But before that, the most important part of trading is the risk management and the money management, because a trading strategy is just a part of game. The most important things are how you manage your money and how you adjust the risk. So I would like to tell you a very simple and the most basic risk management formula which I myself use, and also a few position sizing strategies. So first, let us start with the risk management. What I want you to do is always risk only 1 to 3% per trade, because if you go any higher than this, you may not be able to take more trades and you may not be able to find out if a strategy is working or not. So what I want you to do is follow this rule of risking 1 to 3% per trade, and by doing this you will be able to find the win rate and then risk to reward and then the overall expectancy of this strategy. So you can only do that when you use this principle of risking only 1 to 3% per trade. Now, the next thing is the position sizing strategies. What I always do is I don't enter one single position at a particular level. I like to break it into several chunks and into several pieces, and then I adjust the stop loss and take profit as per the situation. Because that is what trading is all about. You cannot be certain in trading because the situation is going to change. So what you have to do is you have to improvise. So in this case, what I do is, let us say I entered over here. Like, let us just take this example. So let us say I enter over here. What I will do is I won't take one single trade. I will take, let us say, 3 different trades. And then these trades will be based on my principle of risk of only 1 to 3%. Like, let us say I'm risking 3%. That is, let us say I'm risking around $30. And here my stop loss is of 10 pips. So I will take 3 trades of 0.10 each, and then I will close my first trade over here. My first take profit will be over here. So if the price comes down, I already have a little bit of my profit, and my other take profit will be somewhere near here, and then the other will be at break even, so I can ride it all along the trend. So this is how I use take profits and different positioning strategies that will help me to achieve a good expectancy of any strategy. Now, let us move to the next part, which is some questions which you guys personally asked me on Instagram about order blocks and order flow, and also in the comments section. So I will just read it out to you and then tell you what and solve all your queries which you have. So the first question was, are order block support and resistance areas? The answer to this is all support and resistance is not order blocks, but order blocks, like all order blocks, are support and resistance area. Now the next question, which is, what is the time frame you should trade it on? I believe you can trade it on all the time frames. It doesn't really matter which time frame you use, but I have used it on a smaller time frame like 30 minutes to 1 hour and also 15 minutes, and it had worked good for me. So it doesn't matter which time frame you use, just follow all the rules which I have told you and go through the approach which I have told you. Now the next thing is, what risk to reward ratio can you expect from the strategy? Now it will totally depend on what you are doing. Now, as I told you, you can use 2 different stop loss and take profit. So let us go to the screen. So let us say you are entering at this point and you are keeping your stop loss over here, and then your take profit will be over here. In this case, what will happen is your risk to reward will be higher, but this will in turn damage your win rate, because the price can come down and take your stop loss, which will be over here, and then you will be got out of the trade, like kicked out of the trade, and then the price will move in your desired direction. So this may happen. So always remember that you have to not aim for a very high risk to reward ratio. Instead, find a good amount of risk to reward ratio. In my opinion, that would be 1:1 to 1:3, like 1:3 being the highest and 1:1 being a decent amount of risk to reward ratio. Now the next question is how to make sure that market will come back to order block and it's gonna work or not. Now, no one can ever tell you if the price will come back to the order block or will it work or not. The market is totally uncertain, and if you go towards certainty or find out ways to be this certain, then you are actually doing more bad to your strategy and your trading account than good. So what I want you to do is be as uncertain as you can, and then just act upon what is happening in the market. As I always say, do not commit to the market until and unless the market commit to you first. So that's all for this video. I hope you enjoy. Thank you.